If you think crypto is just a game for tech nerds or a quick way to get rich overnight, you're already making the first mistake that most beginners make. The truth is, cryptocurrency is reshaping how money, ownership, and even the internet works, and if you don't understand the basics now, you'll be watching others build wealth while you're left behind. This isn't about hype. It's about understanding a new financial system before it becomes mainstream. Imagine living through the early days of the internet and ignoring it because it felt confusing. That's where we are with crypto right now. The next decade will reward those who take the time to learn, not those who blindly gamble. So, let's strip away the noise and get to the foundation you actually need. At its core, cryptocurrency is just digital money, but unlike the money in your bank account, it isn't controlled by a government or a bank. Instead, it runs on something called blockchain, a public ledger that records every transaction in a way that can't be altered or erased. That means no central authority decides who can use it, no bank freezes your account, and no one prints more out of thin air to cause inflation. You hold your own funds and you become your own bank. But here's the catch: with freedom comes responsibility. If you lose your private keys, your coins are gone forever. There's no forgot my password button in crypto. This is the first reality beginners must accept. You are in control, but you are also fully accountable. The second thing you need to understand is the difference between investing and gambling in crypto. Most beginners treat it like a casino, buying random coins they saw on social media, hoping for a 10x overnight. That's how people get burned. Real investors treat crypto like any other asset class. They study the fundamentals, they understand the project's purpose, the team behind it, the technology it's built on, and the problem it's trying to solve. Bitcoin, for example, is not just digital gold. It's a hedge against inflation and a global store of value. Ethereum isn't just a coin, it's a platform for decentralized applications, powering everything from finance to gaming to art. If you can't explain why you own a certain crypto, you probably shouldn't own it. Then comes volatility, the reason most people fear crypto. Yes, prices swing wildly. Yes, you can lose 30% in a single week. But here's what experienced investors know: volatility cuts both ways. The same swings that scare beginners also create opportunities for those who understand market cycles. You can't eliminate volatility, but you can manage it by only investing what you can afford to lose, spreading your investments across different projects, and never chasing pumps. Crypto rewards patience. The people who bought Bitcoin in 2017 and held through crashes are the same people sitting on massive gains today. The key is not timing the market perfectly, but spending enough time in the market. Security is another cornerstone beginners overlook. This isn't like keeping money in a bank where you trust a company to protect it. In crypto, you are the security. That means you need to use hardware wallets for large amounts, enable two-factor authentication, and be paranoid about phishing links. One click on the wrong website, one fake app download, and your entire portfolio can vanish. Think of it like carrying a bag of gold in public. You wouldn't leave it unattended for a second, so why be careless with your digital gold? Finally, there's mindset. Crypto is not a get-rich-quick ticket. It's a long-term play on the future of technology and money. The people who win are the ones who combine curiosity with discipline. They keep learning, they adapt as the market changes, and they don't let emotions dictate their decisions. FOMO, fear of missing out, will make you buy high, fear will make you sell low. If you can control your emotions and stick to a strategy, you'll already be ahead of 90% of beginners. The bottom line is this: learning crypto now is like learning the internet in 1995. It's early, messy, and full of scams, but it's also full of life-changing opportunities. If you take the time to understand the basics, protect your assets, and approach it with patience, you won't just survive in this new financial era, you'll thrive. The choice is simple. You can wait until it's mainstream and crowded, or you can learn now and position yourself ahead of the curve. In 5 years, you'll either be grateful you started today or regret that you didn't. The future of money is being built right now, and you have a front row seat. Now, let's go deeper into the mindset and strategy part, because this is where most beginners lose their money, not from bad luck but from bad decisions. In the crypto market, every small movement in price triggers emotions. A sudden 5% drop makes you panic. A sudden 20% pump makes you greedy. Both of these emotional reactions are dangerous. The market doesn't care about your feelings, it rewards patience and punishes impulsiveness. If you buy every time something is going up fast, you're often buying at the top. If you sell every time there's a dip, you're locking in losses. This is why experienced investors say, have a plan before you buy. You decide in advance at what price you're willing to buy, at what price you're willing to sell, and you stick to that plan no matter how loud the noise gets. Another trap for beginners is the obsession with finding the next Bitcoin. You'll see coins being promoted as the future of finance, promising insane returns. Some of these projects may be real innovations, but many are just hype machines created to take your money. Remember, in crypto, it's easier to create a token than it is to create a real business. Anyone can copy code, launch a coin, and start marketing it online. Your job as an investor is to look beyond the marketing. Read the white paper, understand the problem they're solving. Ask yourself, would this project still matter if prices didn't go up tomorrow? If the only reason people are buying is because they think it will be worth more later, that's not an investment, that's speculation. This brings us to one of the most powerful habits in crypto, consistent accumulation. In the traditional stock market, investors use something called dollar cost averaging, buying small amounts regularly over time, regardless of price. This same method works beautifully in crypto. Instead of trying to predict the perfect moment, you invest a fixed amount weekly or monthly. Some weeks you buy when it's high, some weeks when it's low, but over time you smooth out your cost and reduce the stress of market timing. The real power here is in discipline. If you stay consistent for years, you'll be shocked at how your small, regular buys add up. We also need to talk about diversification, because putting all your money into a single coin is like putting all your chips on one number in a casino. It might work, but if it doesn't, you're done. Spreading your investments across different types of crypto assets protects you from total loss. For example, you might hold a strong position in Bitcoin as your foundation because it's the most established and secure. Then you could have some Ethereum for its massive ecosystem of apps. And maybe a smaller portion in carefully chosen altcoins that you've researched deeply. The goal isn't to own everything, it's to own enough variety that one failure doesn't destroy your portfolio. Education is your greatest weapon. The difference between a beginner who loses everything and a beginner who builds long-term wealth is how much they understand. That means reading, watching trusted analysts, following market trends, and learning basic technical analysis. It also means studying market psychology, because when the crowd is euphoric, that's often when the risk is highest. And when the crowd is terrified, that's often when the best opportunities appear. In crypto, the majority is often wrong, and being early means thinking differently. Finally, let's talk about exit strategies, because making money on paper means nothing if you never take profits. The point of investing isn't just to watch numbers go up. It's to eventually turn those numbers into something real, whether that's reinvesting in other assets, buying property, starting a business, or simply securing your future. Decide in advance how much profit you're happy to take and when you'll take it. For example, you might sell a small percentage every time the price doubles. Or you might take out your original investment once you're up 100%, letting the rest ride for the long term. The key is to remove emotion from the process and follow a clear system. Crypto investing, at its heart, is about 3 things: knowledge, discipline, and patience. Knowledge so you know what you're buying, discipline so you stick to your plan. Patience so you give your investments time to grow. If you can master those three, you won't just survive the wild swings of this market. You'll thrive in them. The opportunities are here. The question is whether you'll prepare yourself to take them or whether you'll let fear and hype decide for you.